Welcome back, everybody. So in this video, we're going to cover how I handle market volatility and uncertain times in the market. Now, the first thing that we should acknowledge is the history of the US stock market. And if you take a look at the history of our market, you'll see that we've had a drop of 10% or more on an average of like every 2 to 3 years or so. And there have been a handful of times where we've had a drop of 25% or more, which is labeled as a bear market. So the point is, volatility does happen in the market. That's not something you can help, but there is something that can. So before we get to how I navigate market volatility, if you could go ahead and first give this video a thumbs up and subscribe to the channel, I'd really appreciate it. It does show me that this kind of content is actually adding value to your day. And with that, let's go ahead and get into it. So the way I tread through market volatility or uncertain times of the market is actually no different than how I normally invest. The way I like to invest is to run a valuation on the company, run a DCF model, and use very conservative metrics. If you use this method, you can find companies that are undervalued. So if I run a model and I use very conservative assumptions and the company is still, let's say, 30% undervalued, the fact that I know that the company is that undervalued based on my assumption, that gives me padding. That means that if that, let's say, 10% drop comes for a correction, it doesn't really matter to me. I don't have that feeling as if I'm bleeding out with the stocks, because even if it goes down, I know that my investment was already into an undervalued company. And my investing philosophy when it comes to the stock market is that all stocks will go to their true value in time. Meaning if I did a valuation on a company and ran a DCF model and it came back at 30% undervalued, and that's with very conservative metrics to give myself a margin of safety, I know that one day it will go to its true value and grow even more. And because I already bought it undervalued, I have a lot of upside. So how do I get through market volatility? Well, that's how. I buy companies at a discount. The thing is, when it comes to speculative stocks or stocks where someone overpaid for growth just because they like the story, they may look like a genius in a bull market because these kind of stocks, especially speculative stocks, tend to do very well. But as soon as times get hard and there's more uncertainty in the market and more market volatility, stocks like that do not do well at all. You don't want to be in speculative plays that you can't even do a valuation on. And for the stocks where you just overpaid for growth, well, you're not giving yourself any padding. Meaning when the stock starts to bleed out, when you have a correction, you really start to feel it because you know in the back of your mind you overpaid for growth. Who's going to feel better about their investment? The guy who invested in a 30% undervalued company or a 30% overvalued company, but he just FOMO'd in because he really liked the story on the company. So between those two, who feels better when the market corrects by about 10% or more? Clearly the guy who bought the stock at a discount is feeling much better about his investment because even if it drops 10% or more, you still have the stock at a discount with your cost basis. And this gives you an opportunity to buy the dip into something you already knew was undervalued. So that's my answer to how I invest in uncertain times and market volatility. The answer is I invest how I've always invested. I run valuations on companies. I do a discount cash flow model to get the fair value of the company. I use conservative metrics when I'm calculating that model so that I can give myself a margin of safety, so that I can give myself more upside potential, and so that I can buy stocks at a big discount And that way, I'm padded for when there's market volatility. I don't care. This is the philosophy you should always have trading in the market. If you're a day trader, it's different, but if you're a long-term investor, this is the sort of mentality that you should have. And this sort of investing strategy will let you sleep at night. I very much guarantee that people who are FOMOing into speculative plays and overpaying for growth are not really sleeping too well at night right now. Okay, everyone, so that's gonna wrap the video up. If you feel that this kind of content does add value to your day, once again, go ahead and sub to the channel for more stuff like this. And give this video a thumbs up if you feel that it helped to give you a perspective on how to navigate through these uncertain times in the stock market. All right, and with that, you guys have a great day.